Welcome to the Smart Mortgage Show with Bill Litton.
All right, our main topic today, Bill, I want to get in to focus on questions that we should be asking our mortgage lender. And I know that this home buying process, it can be overwhelming. It's an overwhelming experience, especially for first timers. No matter how prepared you are, there's just some things that you're not going to be aware of. So that's why it's important to ask your lender the right questions and to get the information you need. And hopefully this show will kind of help you through that today. But I know that you kind of, as we get into the questions you need to be asking, kind of set this up. It's a lot of times people come in probably without a lot of information, don't know what to ask, right? But this is something that you encourage people is, hey, if you have questions, I want to hear them.
Absolutely. So typically after our initial consultation, because we do ask a lot of questions during that discovery period where we're learning about the needs and wants and goals of our clients, after that, we always say, what are your questions? We've just asked you a whole lot of questions. What questions do you have? And maybe at that time they don't, but the idea is that over time, we want to make sure that they're always asking questions during the process because we're always expecting them and we want to answer questions for them to make sure that they're comfortable and they have a full understanding of how everything works. Now, some people don't have a lot of questions, which is fine too. But if you're curious like me, you probably have a lot of questions.
All right, so I have 3 questions I want to bring to your attention. So if you are in the market, these are some things you should be asking your mortgage lender. So first one, Bill, if the interest rates decrease, which hopefully they will as we move forward from where they are right now, can you offer a lower rate after the loan is locked in?
Yeah, so this is a question that's really good to ask your lender because one of the strategies that we employ is if we lock in your rate today, let's just say we locked it in at 6.5%. That means if rates go to 7%, you're not negatively affected. Your rate cannot go up, which is great. If you didn't lock in and rates go up, now you are subject to the higher interest rate. And if they don't come back down, you're now going to have a higher monthly payment. You're paying more interest, all those things that we don't want to have happen. But if you're locked in and the rate decreases, we have an interest rate renegotiation option, or float down as it's called in the industry. And there's a formula that's applied. The basics surrounding this is it kind of gives you the best, like a bird in hand, almost worst case scenario. So if we lock you in at 6.5, it's not going to go any higher than that. But if the market cooperates, we could possibly float the rate down to a lower interest rate. And it would need to come down before we get to closing, before we sign all of the documents to consummate the loan.
Is that not just the standard thing that everyone offers?
So some lenders offer it, some lenders do not offer it. And we think it's an important part of our offering is that people understand that, that is an option because it helps them make better decisions. I know that sometimes people want to hold out for a better rate or they've heard something somewhere that might not even be a reliable source, but they're hearing things that rates could come down and they decide not to lock and rates go up. Now they're in a bad spot. Now they're paying a higher rate when they didn't need to.
Yeah, and that's the position you want to be in, right? You want to be able to have that flexibility to come down if rates do move that way, but also to lock yourself in so you're not going up. So it's kind of a win-win situation. So that's why you need to ask that question to your lender to make sure they offer that as well, because obviously that puts you in a better position as a home buyer. All right, second question for you then, Bill, is will you be able to help us with payment and cash to close numbers on homes that we are interested in?
So this is really important because a lot of the really important detailed decision making that's going to have a long-lasting effect on your finances happens after you're pre-approved, but before you're under contract. So a lot of lenders are basically spitting out a pre-approval. They're not going to review the loan estimate with you. And they basically say, hey, call me once you're under contract. Well, guess what? At that point, it's too late to see if you've made the right choice regarding cash to close and monthly payment and really strategy on the best loan option, which could vary depending on the purchase price you end up at. So what we say is when you're out driving around looking at houses, if you see something that you like before you sign the contract, before you commit, call us, let us run the numbers. We want to look at the payments based on the taxes on that specific home. Is there a flood insurance consideration? What are the condo or HOA dues? What are the interest rates on that specific day? How does the payment look on that specific purchase price, which is going to be affected by the amount of money that you have to put down as well? So putting all those factors together on that specific house, it's going to give you really accurate figures as to what you're getting yourself into. Do that before you sign your contract.
All right. Got one more question that you should be asking your mortgage lender. Again, if you have questions for us, smartmortgageshow.com is the place to visit after you watch. But the last one, Bill, is the rate guaranteed?
Yeah, so really important question because, number one, a lot of mortgage lenders will quote a lower rate that they can offer just hoping that the market cooperates because they have really a 50-50 shot, right? If the market cooperates, they'll lock you in once the rate is available. And then, if you're lucky enough, you'll get that rate. Okay, if rates go up, I've seen it happen many, many times. If they didn't lock you in and the market didn't cooperate, you're going to get a higher rate than they quoted because a lot of people are fixated on quoted interest rates. And it's not their fault because the internet is full of people waving these commercials and flags and banners in front of you with quotes. So, if we quote you a rate on the day that your offer is accepted and now we can lock you in because you have a specific home and a specific address, which that's what the interest rate's tied to, is the address in the home. On that day, if we're going to lock you in, we're going to send you a document that says your rate is locked. Really important to get that document because it's guaranteeing your rate. The other guarantees are also, there are certain things that we may not control, that could affect your rate. And those particular instances are few and far between. But what it is that we control, we guarantee. So any minor fluctuations, let's just say, for instance, you're going to settlement and your settlement gets pushed out a few days. A lot of lenders are going to try and capitalize on you to raise your rate or charge extra fees. We're going to do everything we can to cover that for you for free, even if your rate expires or if we need to extend it. So when we quote rates, we want that rate that we quoted you to be the rate that you get at the settlement table with no surprises because we've built this whole scenario on being transparent and giving you accurate figures so you can make really good decisions.
Yeah, so very important. Transparency is such a big part of the process for cross-country mortgage. And if you are in the market for a home, thinking about sitting down with a lender and seeing what they can offer you, Bill always tell people, hey, the best place to start is just take advantage of the free kind of mortgage and loan consultation. It's a 15-minute process, right? And they can reach out to you. Just call 484-352-4151. But what does that first conversation look like?
So the first conversation is really a fact-finding mission for me where I'm trying to learn about what your goals are. I want to understand, we know you're going to buy a house. We know that's, and you need a mortgage to do it. But I want to learn all the details. I want to know what's your time frame, what's motivating you to buy, how long do you think you're going to live in this house for, what are your financial goals? Are we making sure that we're setting you up with a mortgage that helps lean into what your financial goals are? For instance, if you're trying to buy a house and you're kind of stretching to your limit payment-wise, and you tell me you want to dump a lot of money into investment accounts and you want to do a 15-year mortgage, those things don't all line up together. There's a conflict there, right? If you want to put money in investments, you might want a 30-year mortgage so you have extra cash flow to direct to the investment. So it's all that kind of stuff we want to think about and help plan out with you.
You could also text the word LEND, L-E-N-D, to the number 21,000 to get on Bill's schedule as well. But again, if you want to call the office Cross Country Mortgage, you can do so at 484-352-4151.